this next one is coming from Michael Saylor, and he's explaining MicroStrategy's decision to issue more stock to take on more debt in order to buy more Bitcoin on their balance sheet. And I think it's confusing to people because they get too caught up in, I don't understand this thing, or what's the difference between Bitcoin and crypto. Just put it like this. If you could go back to 1985 and instead of building a company on top of the internet, you could own a piece of the internet. And for every company that was built on top of that internet, your stake grew in value. Would you do it? And the answer is probably yes.
No brainer.
So with that as the premise, we'll listen to what Michael Saylor has to say, and then just take into consideration that it might be good strategy for you.
Yeah.
Right. The conventional wisdom is when you sell stock, you dilute the shareholders. But in our case, the more stock we issue or the more money we raise, the more we accrete. And so hundreds of thousands of companies have assets on their balance sheet which are dilutive. And Bitcoin is the first major asset which is accretive. So we turn the entire treasury strategy upside down by actually accreting assets. Today we have $15 billion of Bitcoin on the balance sheet.
50. Oh.
And the operating company generates $75 million a year in cash flow. And the operating revenues are $500 million. So we made the balance sheet the primary part of the company instead of the P&L. Everybody else wants the balance sheet to go to zero or negative, and they want the P&L to be the primary part of the company. Right? The conventional wisdom is when you sell stock, you dilute the shareholders.
So what he's essentially saying is we fortified our company.
Effectively, and that is, I guess, the argument is people who believe that it is an accretive asset and those who believe that it's a complete farce. And I don't necessarily have the answer, but I will say that from what I understand about it, it is a rare thing to ultimately own. I think the biggest challenges for Bitcoin are probably on the front of just mining, electricity, the ability, computing power, the ability to actually continually mine these things. But that's also what makes it precious and rare, right? There's a limited amount that'll ever be created, and it does get more challenging with each successive halving, where they cut the supply in half, to actually mine those, while simultaneously computing power hasn't kept up. And so those things make it more rare.
Yeah, and I see just from that clip, the implication being for the business owner is that you can get creative in doing things that protect your business from the economic uncertainties that we're facing.
Right.
Like, yeah. I mean,
so I wanted to go down the rabbit hole, though, just kind of talking about this, going further on this topic of de-dollarization. So if you guys don't know about visualcapitalist.com, it's incredible because it takes
heard of it.
Very complicated, or what feels like complicated topics, and tries to put them into these really easy to understand visuals. So the first one we're looking at is de-dollarization. What is de-dollarization? The process of substituting the US dollar as a currency used for trading commodities and other goods and services. And they walk you through a timeline of dollar dominance. So in 1920, the dollar begins to displace the pound sterling as an international reserve currency after the First World War. In 1944, international trade is conducted using the US dollar under the Bretton Woods Agreement. 1971, this is the big one, President Nixon ceases the direct convertibility of US dollars to gold. So it took it off the gold back. 1960s, European and Japanese exports become more competitive with US exports. There is a large supply of dollar around the world, making it difficult to back dollars with gold. So there's now more in circulation than you could actually have in supply of gold. 1981, after years of hyperinflation, why am I so winded? The US dollar loses.
It's funny, all those times I'm like, why am I so winded? And he's just laughing at me.
Okay. After years of hyperinflation, the US dollar loses 2/3 of its purchasing power. From 2007 to 2008, the global financial crisis, investors seek US dollars, expecting the currency to retain its value. So the flight to safety is what they would have called it when I was on the trading desk in 2008 through 2011. It was the best house in a bad neighborhood. All the other countries were experiencing the same thing, except the dollar was holding strong against everything else. 2014, following the annexation of Crimea from Russia, prioritizes de-dollarization in response to Western sanctions. 2023, this is the big one. Brazil, Argentina discussed the creation of a common currency. The UAE, India explored the use of rupees to trade non-oil commodities.
That's what, yeah.
Russia and Iran worked together to launch a cryptocurrency backed by gold. Despite these movements, few expect to see the end of the dollar's global sovereign status anytime soon. Currently, central banks still hold 60% of their foreign exchange reserves in dollars. So when I say that it's somewhat, I don't know, FUD that we're moving to de-dollarization, like there's still a lot of people holding the US dollar. But the next chart, and this is great visual if you're watching it, which is this one, which is showing the rise, the visual rise of the US dollar since the 19th century. And you can actually see over time.
Visual capitalist.
Yeah, you can see it changing. So there's up until 1914, the US dollar is not even on the chart. See it?
Uh-huh.
And then in 1918, it kicks off and you can see it's climbing exponentially. So by 1923, it's at like 60% of the total currency worldwide. And then you can see it ebbs all the way down to 35%, back up to 40, 33, 32.
World War One. Now we're heading to World War II.
Yep.
Interesting.
So it gets down to 22%, circa 15% World War II. And then coming out of World War II, it literally just goes on a friggin' tear. And it goes all the way up until now 1955, it's like 50%.
Uh-huh.
This will run us all the way to 2022. So let's just, you can, if you scroll down a little bit, Cole, you can actually jump forward. Nope, go up. The bottom of that, hover. There you go. It's just a GIF. Yeah, so circa 2022, it's back to 58.4%. And that's kind of where we're at today still, right?
Wow. So I guess the thing that I think about is it's easy to be, it's easy without really looking at it for it to be an alarming thing.
Right.
When it really needs to be that of a threatening thing. And you have time to prepare, to position, to do the things that you need to do for your company and your employees.
Yes. And we're talking about the dollar globally, right? But that still doesn't really impact us at home. Like one of the things that makes America great is entrepreneurship, capitalism, laissez-faire, the ability to just start something from scratch, right? We do speak the same language, right? So you can go from San Diego to New York and talk the same thing, unlike China where you go from Eastern to Western China and it's different worlds, right?
Correct. Or Africa. And it's,
yeah, exactly. So those things are in our favor. So, sometimes I think entrepreneurs, especially if you're listening to this and you're aspiring, we get kind of frozen and we're waiting for the right time. There's never going to be a right time. But information like this helps you get your head wrapped around it and build your confidence so that you can keep kind of navigating these waters because they're happening whether you like them or not. Right?
True.
And there's a high, there's a fallacy in the security of a salary, right? So if you're mid-career professional, you've been at it for 7 to 10 years and you're maybe getting that itch to take the leap, I would say now is probably the best time to do it. But ultimately, there's never a right time.